Good morning, John. Well, it looks like Americans are still spending, if not a little bit less than they had been anticipated to spend, with retail sales on a month-over-month basis up 0.9%. That's stronger than the month of March, which had been revised already up to 0.7. It's a little bit less than the 1% that was anticipated by economists. The retail sales ex-auto is up 0.6. That is half, roughly, what it was in March, and retail sales without auto and gas up 1%. And that's important because gasoline and food have especially been taking a bigger part of Americans' budgets. You take a look at grocery stores, they were down 0.1% during the month of April, and gasoline stations were down 2.7%. So that's interesting because we had thought gasoline prices had started to go up again, but since they probably held about steady during the month, the percentage change isn't as much. But here's an interesting thing. On a year-over-year basis, gasoline sales are up 36.9%. So you can see an inflation impact there. A couple of other numbers to point out here. Electronics and appliance stores up 1% after a decline of 5.2%. Maybe that's a little bit of a rebound in what people are buying out of housing. The clothing and clothing accessories up 0.8%. Non-store retailers, this is the group that includes Amazon. Tom was talking about Amazon, 2.1% higher. That is a bigger change than the prior month, which was just 0.4%. And food services and drinking places, which is the one we always talk about in honor of Tom, up 2%.
Of course.
After 1.9% the month before. So that little extra he had at the hotel the other night.
Contributing as always.
Doing his best for the American economy.
Equities up nicely here, up 1.3% going into the print, coming out of it too. If you want to see a move, it's at the front end of the yield curve. 2-year yields are higher by 8 basis points. I think we can round that one up now and call it 9 basis points higher at 266 on a 2-year. Seems to me we're trading off the back of, Tom, the ex-auto, ex-gas number, which was an upside surprise. The control group, an upside surprise, and some really decent revisions across the board.
Yeah, the revisions to me are huge, Jill. I look at this like on a 3-month moving basis, so the revisions really matter to me. And John, what's important here on the celebration of the 2-year yield taking a breather, we're halfway back to that 280 level.
266 on a 2-year. That's the question, Mike. You take the data, what does it mean for the Fed? The heat's still on, right?
The heat's still on. It does suggest that we are going to see ongoing strength in the U.S. economy, which is what the Fed wants to see. Jim Bullard, the St. Louis Fed president, just out with some headlines. He's speaking this morning, one of 6 different Fed speakers, including the chairman. I'm not speaking today, but, well, I am speaking right now. And Bullard's saying he expects that household spending will hold up because of the strong job market. He thinks that the tighter Fed policy is already having an effect, and I think he's there talking about the housing sector. And he does not expect recession in U.S. or Europe, even though he said that Europe and China are risk factors for the United States right now.
Mike, before we let you go, we've been talking all morning about how good news may be becoming bad news for the Fed, that basically these numbers coming in strong, and frankly, the upward revision from a negative to a very decidedly positive level for the prior month in the core group, in the comparison control group, really gives the Fed more incentive to hike further. How much pressure does this really put on them to make the 50 basis point moves and then follow it up with additional ones later in the year?
Well, since they've already said they would do 50 at the next 2 meetings, it probably doesn't add a lot to them. What they'll want to see is where they are in July with retail sales. Once we get through the next 2 months, the May and June numbers before the July meeting, and then we'll see where they go when they get to September, because at this point, we know the economy is strong. It's a question of when does that additional weakness we've seen in housing because of higher mortgage rates bleed over into the rest of the economy. Jim Bullard's suggesting it's not going to a whole lot, but we'll have to see.